Good evening and welcome to the Daily Finance Wrap. I'm your host, Kushal Bhagi. It's great to have you with us. In this 30-minute bulletin, we don't just bring you the biggest stories from the world of personal finance, we also break down all the market action that took place today. So if you've missed the market movements or even need a quick recap, we've got you covered. And as always, in our main segment, we'll be joined by industry experts to dive into key topics that can help you better manage your own personal finances. Tonight, I'm thrilled to have later on the show Aabimaanyo Arora. He is the Associate Director, Investments and Partnerships at hBits, which is amongst the leading fractional ownership platforms in the country. We'll be discussing how real estate, which as an asset class has traditionally been accessible to only ultra HNIs and institutions, but is now within the reach of everyday investors. So if you're keen to understand how you can now own prime real estate across the country in an affordable, easy and secure manner, then you're at the right place. Of course, we'll be doing a live Q&A session at the end as well. So if you have any questions about real estate investing that you would like to ask our guest, drop them in the comments and we'll do our best to answer them during the show. Right, now let's get things started with today's top financial stories. We begin with market news, and there was just one color on display today, red. The Nifty 50 was down 0.9% or 218 points to close at 24,180, about 100 points off the lows of the day. But that's now nearly 7.5% lower from its all-time high of 26,178, and it's hard to believe that was just less than a month ago. The mid-cap 150 and the small-cap 250 indices fared worse. The mid-cap index was down 1.75%, and the small-cap 250 was down 2.28%. That's nearly 9% down from their all-time highs. The bank Nifty wasn't spared either, down 1.44%. And the biggest story of the day in the markets was from the banking sector. It's rare to see a stock that's part of the Nifty 50 get a hammering, but that's what happened today to the share price of IndusInd Bank. It fell 18.63% to close at 1,041 rupees after the company reported a 39% drop in its net profit to rupees 1,325 crore in the second quarter ended September 2024. Higher credit costs, moderate loan growth, and slower fee momentum, these were identified as the main culprits for this performance. And while many brokerage houses retained their buy call for the stock, they all did so with vastly revised target prices. ICICI Securities and JM Financial revised its target price both from 1,900 to 1,600 and 1,380 respectively. Citi also cut its target price from 2,010 to 1,630. The stock is expected to remain under pressure in the near term. In the mid-cap space, Dixon Technologies has increased its revenue guidance for the financial year 2025. It had earlier given a guidance of 30,000 to 32,000 crores, but now, according to its MD and CEO, Atul Lal, it expects to clock over 40,000 crore in revenue for FY25. The share price at the start of the year was 6,460. And even with the profit booking today, which dragged the share price down nearly 7.5%, it's still trading at 13,937. That's more than double since the 1st of January this year. All brands in the Android ecosystem are customers of Dixon Tech, and brokerage firm Nomura has the highest price target of all brokerages at 18,564. It still maintains a buy rating. Okay, we're moving on to our next segment, and as I mentioned at the top of the show, today we're going to be discussing real estate. Whether it's a residential flat, whether it's an office space, or even just a parcel of land, everybody would love to own real estate. But it isn't easy. And there are many hassles that come along the way. The most obvious being that you need large sums of money to invest in real estate, and not everybody has access to that kind of money. Real estate deals are often messy. Legal proceedings, you may be stuck with bad tenants, even ongoing maintenance issues are some of the pesky things that property owners may have to deal with. And then, of course, there's illiquidity. Unlike shares in mutual funds, which you may be able to sell and get the proceeds in your bank account on a T+2, T+3 basis, it doesn't work the same way in real estate. In real estate, sometimes you might be stuck for years. You might even be stuck for decades. So, for many people, including HNIs, it's not always a straightforward experience, and owning real estate often remains just a dream. But Aabimaanyo Arora and the team at hBits are out to change all of that through a concept called fractional ownership, Welcome to the show, Aabimaanyo.
Hey Kushal, how are you? Thank you for having me here. Pretty excited to be on this show.
Great, that's fantastic. So let's dive right into it, right, Abhimanyu? Before we get into what exactly is fractional ownership, can we brush up a little bit on the concept of REITs? Because REITs is a slightly older product than fractional ownership, and the purpose of REITs was also to make real estate more affordable to a wider set of investors. So you want to start by telling us what exactly are REITs and what, according to you, has been the report cards on REITs so far?
So REITs is basically, if I give you a little bit background, it's basically a group of assets with group of customers, wherein a group of assets could be commercial assets, residential assets, could be a form of land, could be under construction assets with pool of investors, wherein the income earned by them is basically could be biannually, quarterly, as per the requirements. It's basically real estate. Currently, we only have four REITs in the market. To name them, it's for you. It's Embassy Office Park REIT. It's Mindspace Business Park REITs, Brookfield India Real Estate REIT, Nexus Select. So they just hardly four of them at this moment as we speak about.
Okay. And that's a little bit about REIT. So you want to dive into exactly now what are fractional ownership platforms and tell us a little bit about how these platforms actually work and operate.
So, as I mentioned about REITs, the difference between REITs and fractional ownership could be one basic, just to get a inline and understanding. In fractional ownership, we deal with one single asset with group of investors. If I tell you about fractional ownership a little bit in things, uh, well, we if you look at the most understanding of this particular concept, fractional ownership at commercial real estate is at its pioneering approach that allows multiple investors to collectively own shares in a commercial property, unlike traditional real estate investment models where a single entity or individual owns the entire asset. Fractional ownership divides ownership into smaller, more manageable shares. Each investor holds a portion of the property where to their investment contribution. In addition to that, I'll just say this innovation concept democratizes access to commercial real estate investments, opening doors for real estate investors who may not have the financial resources and purchase properties through outright. Though fraction ownership investors can prove their resources to acquire premium commercial properties, benefiting from potential rental income, property appreciation, and diversification within their approach and portfolios. Additionally, fraction ownership with flexibility allowing them to choose properties that align with their investment goals. Well, it is basically overall done for the everyday investors.
Okay, so if I understood you correctly, what you're saying, let's assume there's an asset that is worth 100 crores. Okay. In fractional ownership, you have 100 investors, each contributing 1 crore, or you have 200 investors, each contributing 50 lakhs, and so on and so forth. And they then collectively own the asset. Is
Perfect.
that correct? So it's almost like a mutual fund of sorts where multiple people come with various ticket sizes and then they collectively own that particular asset. Is that
Perfectly
correct?
right. Perfectly
Okay.
right.
And under what structure is this set up? How do they then own that asset?
So, as of now, we are currently creating this as per a special purpose vehicle.
Okay.
Could be a private limited company, could be LLP. Currently, we form a special purpose vehicle under the formation of PVT Limited. However, with the current structure coming into picture, where a SEBI is as well come, there is more additional news which will surely. I am sure there'll be more questions over the line, and I can cover that particular part. Good news is that the owner of this particular opportunity is the good news is right now the property is owned by the SPV, and our investors are the own unit holders slash shareholders of this progress, which actually gives them a benefit of co-owning this property in percentage ownership.
Okay, okay, that explains a little bit. So, let's take this forward. And what I want to do is let's pick up certain features. I want to see and understand for our viewers how the buying process actually works in fractional ownership and how fractional ownership stacks up against the more traditional way of investing and buying real estate. Okay, so let's take a series of points and let's address it point by point. And let's start with affordability. Affordability is one of the biggest impediments to owning real estate because, frankly, the ticket
Correct.
size is very large, right? Now, if somebody wants to go and invest in the fractional ownership model, is there a minimum amount that one needs to commit? What is that amount?
Generally, it's running anything between 30, 40, 50 lakhs. And with the going effect, how it is getting for everyday investors, people can go online and start investing with a small ticket size as 10 lakhs.
Okay, 10 lakhs isn't bad because, I mean, if you think about it, PMS, you need 50 lakhs to invest. So here you're saying with 50 lakhs, actually, you can buy five different commercial properties or bits of commercial properties across the country. So 10 lakhs is a good amount. It's a
It's
pretty
an
affordable amount.
amazing
It is
amount.
to add real estate to your investment portfolio. So, okay, that takes care of the affordability bit. Let's talk next. Suppose I have the money, I want to invest. I think the first question that, as a buyer of real estate, Aabimaanyo, I want to ask myself is: should I be looking at residential real estate, or is commercial real estate also a viable option? Do you have any thoughts on that?
Uh, the one thing which we actually need to go back and think is that traditionally, being Indians, we from when we were small, we were taught to buy residential properties. As
Yeah.
in, our parents used to say, just make one home for yourself. So that became a kind of thought in our mind. And then when we started working, salaries came, and then we used to receive phone for home call. What do you call that? Home loans, and then we used to buy residential property. But nobody happened to get approach and reach out to commercial property. Looking into deeper, if you look actually sit down on the maths, residential rental yields generally just give you around 2, maybe 2.5% rental yields, whereas the commercial property yields are much better.
Okay. And what would commercial property yields typically be at?
Anything between 5 to 7%.
Oh, that's significantly higher than
Yes,
the residential yields. Okay. So commercial property is, and when you do fractional ownership, for example, through your platform hBits, we are talking about commercial property, I'm assuming, right?
correct.
Okay. All right. Fine. So, okay, let's then take this thought process further. So, we've got the funds. We've identified that we want commercial property. Now the question comes of, how do I select which property to get? How do I know which market one has to go into? How do I know which micro market one has to go into? Whether the building is free from encumbrances, whether the titles are clean. These are all issues which a normal person, when they're going to buy real estate, can really come undone by. So, I guess my question to you is, how does the industry really go about their property acquisition process? And how do you guys ensure that high quality assets are actually coming to the table, which investors and retail investors now or everyday investors can participate in?
Sure. Well, when we talk about fractional ownership under the commercial real estate segment, we only and only deal into pre-lease commercial properties. That means the property is already ready, OC is already received, and tenant is already there. And when we talk about this, we already only and only go for grade A properties with A grade tenants. Generally, these A grade tenants get into the property, even they do a due diligence in this particular segment. Well, when we are acquiring this particular property, we look at the micro and macro economics. We look at the location of the property. We look at the due diligence on the tenant. Typically, they are A grade tenants. And when we talk about this, we do the due diligence with the help of our legal partners. Currently, if I talk about the legal partners are pretty, like if I'm talking about our legal partners to be Shardul Amarchand Mangaldas, famously known as Sam, they're among the top 10 law firms in the country. They do the property due diligence. We look at the quality of the building, we look at the quality of the tenant, the longevity, higher lock-in periods. These are the numbers, and as well as when we talk about the ROI in the current market segment, last but not the least, people tend to use and just only talk about ROIs, which is 5%, 6%, 7%, maybe 9%. But to be honest, we as well need to look and get into deep dive your entry price point of the property, which makes a big deal and actually is a game changer when you're actually exiting the property after fifth year.
Okay, so out of curiosity, how many properties does your team actually evaluate before getting one property to the market? Do you have a
Well,
number like?
well, to be honest, and between me and my team, and you'll be surprised to know, our email box hits approximately 10 to 12 properties every day. Okay,
A day?
every day.
Okay.
And we generally get into that particular specific, then we analyze that this property is fine. Is it in the right location, right distance, right tenant, right quality? And believe me, that 100 properties, if we have received, we the due diligence, and actually maybe out of 200 properties, we select one property.
Okay, so that's a pretty robust process
Pretty
that you're
robust,
having over there in the
pretty
background.
robust.
Okay. Abhimanyu, you've been talking about tenants and good quality tenants, and there's a due diligence that you all do as well on a particular tenant. And I think that's a really interesting part about a real estate investment, especially if somebody is buying real estate and leasing it out or renting it out. You want to make sure that the quality of the tenant is pretty high, right? Nobody wants to be stuck with a bad tenant. You want a tenant who pays you on time. You want a tenant who has the potential to remain with you for longer time, because this just is just less of an irritation, right? If I can say it like that. Anything you want to tell me about the typical profile of tenants
So,
that are there in these kind of platforms?
so I guess one thing which I would like to put across is that in fraction ownership, generally these are the people which, these are the particular tenants. Of course, it's a rent yielding products. So we need to make it a point and mitigate that particular, that this rent has to come.
Hmm.
Hence, we are then directly dependent. We will not get those tenants which are not directly dependent on revenue or the income. As in, I'll not get for me, for my clients, which is could be a sales office or a corporate office. We generally deal with the tenants like ICICI Bank back office, uh, Microsoft back office, IFL Securities back office, Ingenico e-payment gateways. We've done Toyota, again, research and development wing. And we generally look at those particular companies and tenant which have a high lock-in. They're there to stay for 10, 20, 30 years. And generally, research and development wings and such companies which are looking forward to be there, they actually stay over there for long term. It's not a sales kind of a thing. So the feasibility of being in that particular property is much more longer.
Okay, so you're saying that you don't look at front office, uh, showroom kind of tenants, because tell me one thing, because I want to find out and check about the risks associated with this,
Mhm.
especially during COVID, right? Uh, there's always a fear that your tenant is going to stop paying you rent. In that case, what happens to the nature of this investment? Have you ever been faced with a challenge like that, or has the industry ever been faced with a challenge like that, that your tenant may be a good high profile tenant, but the rent stops coming in?
So you'll be surprised to know, Kushal, this question is asked to me by each and every client, because of
Right.
course the only, and this is actually the question which I answer for every time. So during the COVID time, our agreement, so our lawyers are Shadri Mr. Mangaldas. They actually look at the rental agreements watertight. They are like very good, clean. And as I mentioned earlier, that the tenants which we get are not directly dependent on revenue. Hence, those particular tenants are basically there to stick, and they put machineries worth crores of worth, if it's a research and development wing. You'll be surprised to know that during COVID time, forget about negotiation, there was not a single day delay in the payment of the rent as well.
Okay, that's actually very good to know. So let's move on from this now, right, to the next step. You've bought the property, you've got a quality tenant in it. Abhimanyu, you want to tell us what kind of returns one can expect from this sort of investment, from an investor's perspective or from a client's perspective?
Right. So this asset class generally gives two different kind of cash flows. One is a monthly cash flow, how a normal rent will come into your account every month. If I talk into the maths of ROI basis, it could be anything between 7 to 9% annually paid out monthly, as well as while we the property goes by, and we generally go for a product which is a 5 year product. At the end of the fifth year, there is a we exit the particular property. Hence, there is a property appreciation to it. If I look at the property appreciation, it goes anything between 5 to 7% yearly. So we end up making approximately 14 to 16% targeted IRR during the end of the exit. Of course, gross
Okay.
of fees and expenses.
So what you're saying is that this is almost like a hybrid product, right? I mean, not a hybrid of debt and equity, but you're saying hybrid of debt, yes, because you're getting monthly payments, and these monthly payments come to you regularly, like on a fixed
Yes,
date every month.
on a fixed date.
Okay. And then you're saying that, as I understand, the stated objective of these platforms is that you'll want to flip the property at the end of 4 years, 5 years, etc. So you're not just getting the monthly coupon, if I can call it that, but there's an additional kicker,
Mhm.
which sort of which sort of is giving you, then you're looking at returns which are positioned between debt and equity.
That is
Is that
right. That
understanding
is right.
correct?
If you look
Okay.
at putting in
Hmm.
both the parameters of the cash flow into the rentals as well as this, both of them come and it turns out to be between 15. And you have totally rightly mentioned it.
Okay, nice. Tell me one thing: is our fractional ownerships regulated by SEBI?
At this moment, no, but just to let you know, we fractional ownership in India came approximately 5 years back, and we were
Okay.
the starting players in this particular segment. We pretty much warmed up the industry. There were other players which came into picture. Uh, Approximately to in 2024, there was a lot of discussion between SEBI and all the fractional ownership players. They saw that the industry is growing and there is a promising way on to this. Uh, they had a dialogue with all the particular companies. There was a consultation papers which was released, and I'm happy to state that approximately 90 days back, 100 days back, SEBI has given a go ahead, a green signal to all the fractional ownership companies as a to go ahead with the fractional ownership as a property, a segment under which is going to be called as small and micro REITs. Hence, looking into this, all the players of the fractional have applied for the SEBI license.
Okay, that's a big development for the industry, I guess, because having a regulator like SEBI be a watchdog over it and look after the investors' money, obviously that would give investors a lot of confidence to put their hard-earned money into this. I want you to address just a couple more points before we take some viewer questions, right? One of the biggest impediments to real estate investing is liquidity, right? How does fractional ownership? So suppose I buy a piece of this asset that you'll
Mhm.
offer, and I want to sell my particular piece of the asset. There are 100 other investors who collectively own the asset. I alone would like to sell my piece of the asset. How does that work? And do you all have? Is there any advantage in how you all solve the liquidity aspect of
Sure.
owning real estate?
Well, SEBI coming into picture, and as we categorize the SM REITs, a customer can directly go to the exchange, see that particular scheme where the customer is invested, click a button, sell, and they can have a liquidity. In the
As
current
easy as
scenario, yeah, please.
as easy as that.
As easy as that. Just like opening up a fixed deposit, diluting a fixed deposit, as opening going to an ATM. It's as easy going to be that.
Okay. And currently, I mean, because currently they aren't yet listed on the
Right.
platforms, right? So what happens if somebody invests and in the interim, how does that work? You want to
So
just
currently we are at this positioning wherein the customer can just give us a call, write an email, go on our website, speak to a chatbot, send across, click a button, sell over there. We have always have a waiting list for each and every property. On not for us, for all the fractional ownership companies, it's written on their website that we'll be able to give a exit timeline between 0 to 60 days. To start off with, it was earlier 0 to 90 days. How the industry is growing today, I don't see that there is an exit. If people have coming for exit in between, we have never surpassed 30 days as well.
well, that's actually a game changer, and that's some sort of potential game changer for this industry because otherwise, you are talking about, I know people have been trying to sell their real estate for
Oh,
years, sometimes unsuccessfully, and you're talking about 15 to 60 days and going forward, even just selling it off an exchange.
that's right.
That could be interesting. So, I want to end sort of this question and then we'll move on to some viewer questions. How easy it is to invest in these or through these platforms? Can you talk us just very quickly through the buying process?
So again, it will be like a surprise to you. You need just a laptop and an internet connection. That's it. It's a prop tech firm. Hence, we are digitally equipped with the laptop and we are able to do that. And of course, the industry says that the net banking average or the banking people have started working on tech. You just need to log in on the platform, create your account, do your KYC, and then choose the property which you want to buy, sign the ownership agreement. While doing that, you can as well look forward to choose which property you want to choose, and then pay the amount and easily start getting rentals every month. Just to add you, which this particular process coming into it, 35% of our investors are NRIs. So people sitting in any part of the globe are actually doing investments with us.
Okay, that's interesting. Abhimanyu, before we go, we're just going to take some viewer questions. And
Sure.
Harshvardhan Sharma has one saying, what happens if the tenant does not pay? Does the investor bear the loss? So first, maybe you could say, does it ever happen? Has it ever happened? And if it happens, then then
Right.
where do we stand as far as that's
So,
concerned?
thank you, Mr. Sharma, for this question. And this is, of course, a question which we hear it all the time. Uh, Primarily, we would like to mitigate this risk to the level of 98, 99%, wherein we choose high lock-in tenant. We collect the security deposit from them. If the tenant wants to vacate, they have to give us a 6 months notice period. In addition to this, we as well collect security deposit from them. Furniture and fixtures should be done by the tenant. And of course, we are choosing certain tenants which are not directly dependent on the revenue. Having said that, if it is a scenario, we choose a property today which is where the vacancy percentage is less than 2%. So the property should be in demand at all times. Now, if the scenario comes in with all these possibilities that the tenant is not there, of course, your capital is there, which is there, property insurance is there, and the rental will, of course, not come. But of course, property that face value, the shelf life is always available with you. Just to as well, in addition to which would might be a promising thing to state more, when you earn income, then we would earn income as a platform. So it becomes very necessary for us to deliver you rent as well.
Okay, that explains it. So you're saying if there is a case also where the tenant stops paying rent, A, at least you own the property still. So
Exactly.
that's point number one. And B, the tenant is quite invested in this entire property. So the likelihood of them not paying rent is minimized through the kind of setup and the structure of this particular platform, if I understood it well. Okay. What about the tax implications, Abhimanyu? If you can just give it both from the
Sure.
monthly rental perspective and then the capital appreciation perspective.
Sure. One part which you just mentioned earlier question. So till date, it has never happened that the rent has not come. Yeah, which is missed out. So for the second part right now, is that in terms of the tax implication, since the ownership is divided between debt and equity, that is CCD and shares, your taxation under this product line is basically as per the same FD taxation or debt taxation, wherein TDS is charged up to 10%. It is as per your tax bracket. As well, saying that a lot of the clients happen to invest through HUF and all other accounts, wherein it could be 0% tax liability, zero tax liability. So they as well can submit 15GH form and there is no TDS cut. Well, that is on your monthly returns, which you get into your account. At the time of the fifth year exit, now we all know that there was a lot of buzz in the market. There is a 12.5% straight long term capital gain tax on this particular thing at the time of the, that's the capital appreciation now.
All right, we're out of time, Abhimanyu, but there's so much more to discuss on this topic, really. So, maybe next time we'll have you over and we actually take a live property that we all have available for subscription and do a product run through. I think that way the viewers will be able to get a much better understanding of how they may actually be able to own a fraction of prime commercial real estate. Thanks, Abhimanyu.
Well, thank you very much for having me here, and it was pretty exciting session. Thank you very much.
Great. With that, we've come to the end of the show. Be sure to subscribe to the channel, which is Personal Finance TV. And remember, the daily finance wrap goes live every weekday at 6 p.m. So stay tuned for some insightful personal finance content. Thank you very much for watching. That's a wrap.